Hello and welcome to Core Finance. I'm Matt Brown. I'm joined down the line this morning by Tim Young, who is a trader at Ayondo. How are you today, Tim?
Good, thanks, Matt. Good. Yourself?
Yeah, very well, thank you. Bit of a turbulent week, and certainly for equity markets as we go into the back end of the week with this kind of risk-off theme. How have you fared this week on the FTSE?
It's not been a particularly good week for me, I've got to say, especially after my bold prediction of a breakout last week, which was looking good until I think the fears over North Korea. That's my view. It's just overshadowing the market, and people are just a bit nervous at the moment, I think. So it hasn't been a particularly good week for me, to be honest. It's not been easy to make money on the long side. It started well, but we're reaching extreme oversold levels now, certainly on the 4-hour chart. So, I think things can only get better from here, I would say.
Yeah, well, let's have a look at that 4-hour chart. As you mentioned, the market being oversold, we can see the stochastics and RSIs. So for our viewers, if you can just talk us through what you're looking at here.
Yeah, basically we've got these two indicators, the stochastic and the RSI, which are under their what are called oversold lines. So on the stochastic, under 20s oversold, and on the RSI, under 30s oversold. And that was of yesterday close. And since then, the market's dropped down nearly another 80 points from there. So we're way oversold now on the RSI. It's probably the most we've been this year. And every time so far the RSI has been down at that kind of level on the 4-hour chart, it has bounced back. So we are in extreme. I think the panic over this whole North Korea thing is kind of overdone. I think there's too much of it baked into the market, but that tends to be the way it goes with these kind of things. So it's a tough time to be long at the moment, and obviously my prediction of a breakout didn't come to fruition last week. But doesn't mean it won't. It's just I think this North Korea thing's put a temporary damper on things.
I mean, as you mentioned, as we've seen this year, whenever the market is trading below the RSI, it has bounced, and I think people will start to look at this North Korea thing. It's been a bit of panic in thin markets as well, that if we can start to move back up, that the current levels at the moment certainly are a buy opportunity.
That's exactly what I think. Basically, I think you made a good point there. The fact that it is thinly traded markets. A lot of traders will be on holiday at the moment. So yeah, I think you've just said it exactly, really.
And trading today, are you using this sell-off as an opportunity, or are you going to trade in size, or do you feel going into the weekend that maybe a small amount of trading is necessary?
I'm not going to be adding any more long positions this side of the weekends. I think I just want to see how things play out. I don't want to have too much of a stressful weekend. Looking at the 24-hour news, seeing what's happening in Korea. So I'm not going to be adding any long positions, but I feel that once this crisis, assuming this crisis does blow over, which they tend to, I think we'll get a resumption of the way things were. These things tend to be overblown, and I wouldn't be surprised if we're talking in a couple of weeks and the FTSE's back at the level it was last week, over the 7,500 level again.
Which leads us on nicely to the weekly chart, so we can get a better overview of where we've been over the past year or so. Just walk us through what you're seeing on the weekly basis.
Yeah, I have to say the weekly doesn't look particularly good there. What with that reversal, it looks like we might be getting a little bit of downside still more, but that wouldn't necessarily be a bad thing if we just went back to some slightly oversold levels on the weekly. I think it would give it a good base to go back up again. So the weekly isn't painting a particularly pretty picture at the moment. If I was looking at that, I'd say it's likely to be going down over the next few weeks. So it's kind of conflicting signals at the moment. This time last week, it was looking like it was about to break up to new highs. But now, given what's happened this week, it looks like we're going to get a little bit more downside follow-through, I think, before we then resume going up again. That's my take on the market. So I'm still bullish, but I think we're going to get maybe a 1 or 2 week downward move over the next couple of weeks.
Which also goes to show you can look at a daily chart, but it also helps to look at, say, a weekly or monthly chart as well to get a feel of how the whole market is doing. If you focus too much on, say, a tick by tick chart or a daily chart, you can maybe miss the bigger picture going on with the market.
Absolutely, yeah. I mean, the bigger the time frame, the more reliable the charts are. But you're kind of getting mixed readings there. So the 4-hour chart's extremely oversold, which indicates we're likely to get some sort of bounce over the next few days. But then the weekly's looking a bit bearish. So it will be interesting to see how it plays out. But as always, I'm only going to be taking trades on the long side. I don't like to short this market because I think the overall trend of this market is still higher. And we've had lots of these pullbacks and blips along the way. I think this is just another one of those.
And an opportunity potentially.
Absolutely, it's the time to buy is when everyone's scared and it's oversold. That's the time when you should be buying. But people seem to do the opposite. I would say this is the sort of time you want to be buying.
Fantastic. Well, with those wise words, Tim, thank you very much for joining us, and I hope you have a restful and peaceful weekend.
Thanks, Matt. You too.